here. So I am going to start the recording. I did that so I can make sure we do it. And I'm going to start sharing my screen. So tonight we're going to be talking about Massive Capital's 2025 playbook and some of the assets that we're looking to get into. I am going to put my contact info, that's the wrong one. I'm going to put my contact info in the chat. I always love connecting with people, helping you get on your journey for financial freedom through real estate investing. So I'm going to put that there now. And so we're going to get started with the presentation. So we're going to inside Massive Capital's 2025 playbook, the assets that we are betting on. So again, this is an educational series. It is for your learning only. You should always use your own due diligence before making any real estate investing. So a little bit about myself. I started passive investing in 2018, and strong mentoring program and a team have changed my life. In that time, I've been a limited partner in 20 syndications. I'm now a general sponsor in 14 for a total of 32 syndications. We will talk a little bit about what is the difference between limited partner and general partner. Massive Capital itself, we're a vertically integrated real estate company. We're a developer of Class A retail and town centers, and we're owner operator of value add multifamily. Most of our assets are in the Texas market, but we do have a couple of properties in Denver, a couple in North Carolina, a couple of in Georgia, and we are working on a deal out in Arizona. We are partnered with Realty One, who is our broker for the and the construction company for the triple net retail. They have about 300 million in assets, and then Massive Capital itself has about 210 million in assets. So we're going to talk tonight about where are we looking to invest. So we'll always start out with what's a syndication, a GP, and an LP. Why do we still think multifamily is a good option? We're going to talk about retail and industrial, assisted living. Then we're going to have some time for any questions and answer. And obviously, always try to learn the power of investing in syndications. So for those of you that are new, a syndication is a group of investors who pool money or buy or develop real estate. Syndications are ways for investors to invest in larger properties that they could not afford on their own. As a limited passive investor, it is totally passive. How it works, sponsors are general partners. They're called GPs. They're experienced real estate professionals who organize the syndication, secure the funding, and implement the business plan. Limited partners, they're called LPs. They're the ones that fund the project and they actually own a portion of the asset. So I'm going to give you a little example how this works. Let's say we're going to buy a $10 million property and we're able to get a $7 million loan on that property. That's about a 70% loan to value. It's very normal on what happens. So what happens is the general partnership team, they're the ones that will go ahead and get the loan. They will sign on the documents. They're the ones that have to have the net worth, the liquidity, the experience to be able to buy the asset. They will organize everything. They will implement the business plan. And our passive investors, they're the ones that will fund the difference of our project. So again, I'm not going to talk about any extra costs to renovate the project or do different things because we'll normally raise more. I'm just trying to make a simple explanation that we're going to buy a $10 million property. We're going to get a $7 million loan, and we're going to get $3 million from the passive investors. But what I want you to understand is the beauty of being a passive investor. You actually own a portion of the asset. And in fact, in most cases, you're going to own 70% of the asset. So think of this, you're funding 30% of the purchase price, but you own 70% of a $10 million asset. That's pretty amazing. That's the power of leverage on the real estate debt. And then the power of being a passive investor in someone else's syndication. So again, as an LP, you have limited liability. It protects your personal assets beyond the investment. I do want to make sure I'm honest and clear that the investment itself can be at risk. You could lose your money. It also allows you to target investments. So we're going to talk about a few different types of asset classes and things, and you can invest in different types of assets, and then the returns are always directly tied to the success of the project. So again, there's rules for doing syndications. We always start our syndications as a 506B, and on a 506B, we must have a pre-existing relationship and you must be considered a sophisticated investor. So again, a pre-existing relationship means that we've had one-on-one meetings. I understand you, you understand me. We have this existing relationship. So if we don't, you want to make sure that we have one because there are only 35 spots for non-accredited investors allowed to invest in any syndication. And again, we provide these to our community on a first come, first serve. So we want to make sure that we open up our investments for non-accredited investors first. One of the things that can't happen is I can't generally solicit. So I can't put it in any of my marketing. I actually can't even talk about them on these particular webinars because it's a public webinar that's posted on YouTube and different places. Then there's a 506C. Now, some syndications just start as a 506C. And in fact, for many years, really only accredited investors were able to invest in these institutional type investments. So as an accredited investor means that you have a net worth of $1 million in assets, excluding your home. Or as a personal person, you have a $200,000 income. Or if you're filing married, you have a $300,000 income. So these are the only folks that can invest in a 506C. You must be accredited and we must verify that you're accredited. Now, for me, this makes it a lot easier because there's no restrictions on soliciting. So it's the biggest availability to market to everyone. So again, we have about 14,000 names in our database, but only 6,000 of those we have listed as 506B. So what we do is we send the deals out to our 506B first, and then we'll switch it to a 506C and we can send it to the entire database. Note there is no difference between a 506B or a C, only who can invest and can I market. I also want to make sure that I'm clear. When an offering is a 506B, as accredited investor, you can still invest. And in fact, it's a very good time to invest because you don't have to go through the net worth verification. You can actually self-verify that you're an accredited investor and you don't have to go through third-party verifications. So I think I mentioned I've been in 34 deals. Out of them, only once have I actually invested in a deal that was only a 506C and I had to verify that I was an accredited investor. All of the other ones I invested while they were still a 506B. So again, if you're interested in getting into a deal, make sure that we have, and again, doesn't mean you're going to invest. It just means you want to get early access and learn. Make sure that you reach out to me, connect with me, and you can join my wait list. And so one of my last deals I just had, we only had a few spots in. I only got 4 investors in that deal, but one person on my wait list was able to be one of the first ones to be able to get in it. So reasons why we think multifamily properties are still a good option. So one of the things is multifamily, this hasn't changed for years, and I don't think it's going to change for a while. That multifamily properties provide a reliable source of income because of the multiple tenants. So for example, if you buy a 100-unit apartment complex and you have 10 vacancies, you still have 90 people that are paying rent. So even if one unit is vacant, income from the other occupied units helps maintain the cash flow. It reduces the financial risk compared to single family homes. Also, in a strong rental market, filling vacancies can be relatively quick, minimizing the downtime and maintaining a consistent cash flow. So again, with our multifamily properties, we are always looking for tenants. We are never 100% occupied, I'm going to be honest. And in fact, if a property is 100% occupied, chances are your rents are too low. It's time to put your rents up and be able to get some new tenants in at a higher risk or higher price. And so again, you want to really make sure that you're always, always, always marketing to fill these units. And again, there's long-term appreciation and wealth building. Multifamily real estate tends to appreciate in value over time, providing the potential for I cannot talk tonight. Significant long-term equity growth, strong rental demand and property improvements and overall market growth will contribute to this appreciation. Now, one of the things that's super important in here, we're normally buying what's referred to as value add multifamily, where we add value to the apartment. So what we do is we fix things up, we would do better marketing, we do better management. There's a lot of things, and I've done some presentations before where we talked about the type of things that we've done to be able to get our properties looking nicer. And so just give you an example. Remember before we talked about a $10 million property, let's say it's got 100 units. And if I could take all 100 units and I could increase the rent by $100 per unit, that actually would create $2 million worth of value. And you think, how in the world can that be possible? If you have a single family home, you increase the rent by $100. Does it increase the price or the value of that home? It does not, because the value of the home is based on the comps in the area. But on multifamily, the value of the business is based on the net operating income. So if you can take 100 units, charge $100 more, you start aggregating that all out, and it would actually produce $2 million worth of new value. That's at a 6% cap rate, which is about normal for most of the properties we're looking at. So again, we bought this property for $10 million. We pulled one lever, which was rent increases, and we managed to increase the value of that property to $12 million. There are other levers you can pull: paid parking, covered parking, laundry services, package services. There's lots of different ways that you can add additional revenue on top of that. I just wanted to point out the one main one that can happen. Financing tends to be easy for multifamily. Now, I know that sounds bizarre, right? When you think we're going to go out and we're going to get this $7 million loan on this particular property, and that to the average person is very daunting. But to the average syndicator of a scale of massive capitals, that's actually a fairly small loan that we're getting. And to be able to get a loan like that, there's several things that you have to have. Number one, you have to have the net worth of that loan. So who's ever signing on the loan needs to be worth at least $7 million. They also need to have 10% liquid. So they have to have about $700,000 liquid. But more importantly, they have to have the experience. These lenders are not going to lend you that kind of money, even if it's an amazing property, if you haven't built up and can show that you have the experience level. Now, experience, net worth, and liquidity, all of those things can be the combination of a few members on the team. So when you're getting into bigger deals, sometimes you'll have a few members that will qualify these, but they're much easier to get than single family homes. Because again, you get a couple in loans on a single family home and your income is maxed out. It's all based on that. Another crazy thing that's kind of amazing about multifamily loans is, let's say I have a net worth of $7 million and I can get a loan very different than the single family space. I can actually get multiple loans based on my net worth. Now, eventually, if you're getting them all with one agency, you may max out, but it's quite amazing that they really make it available for you to be able to get pretty good financing. These traditional loans would come from Fannie Mae or Freddie Mac, and they have a mandate to provide housing for people in America. So again, multifamily investing allows for quicker expansion of your investment by acquiring multiple units at once. So again, you'll be able to do that. There is huge tax advantages on investing in multifamily. So there's a lot of things that can happen that you get a lot of advantage on your taxes. And the most important one is cost segregation. So for those of you that have been paying attention, the big beautiful bill did pass and it put bonus depreciation back up to 100%. So when you passively invest in real estate syndication, the sponsor may, and in fact will always order a cost segregation study to accelerate the depreciation. So instead of writing it off for 27.5 or 39 years, they'll break it into faster depreciating parts like appliances, floors, even landscaping. and then they stack on the bonus depreciation, creating a massive paper loss for you in 1 year. So if you make a passive investment on your K1, because you own 70% of this asset, so whatever we can get on our bonus depreciation, so again, those are passive losses. They're often referred to as paper losses because we haven't lost any money, but what we're able to do is accelerate the depreciation. So let's say you could put in $100,000 on a multifamily investment. You could probably get about a $70,000 passive loss. Now, the passive losses are different for everybody, just like everything else is. So for myself, for example, I'm a full-time real estate professional. I am able to use the full value of those passive losses. Love them or hate them, when Donald Trump was doing his debate with Hillary Clinton, he talked about the fact that he paid no taxes, and this was one of the levers that he uses to pay no taxes. So again, this will come on your K1, which is your financial statement at the end of the year. So the property's actually making money, but you'll get a negative K1. Now, if you're not able to use all of your bonus depreciation, don't worry. It's not a use it or lose it. It will stay as a carry forward passive loss. So you're writing it off against your passive earnings. So once the property starts paying you some money, you'll be able to offset that money that you've made with your passive losses. Now, I want to make sure I'm clear. I am not an accountant. I am not your financial planner. So always make sure that you talk to some other professional about this because it's very personalized. Everybody has a different situation, how they can use these benefits. And then obviously it gives you diversification and stability, right? Multifamily can help you diversify your real estate portfolio, spreading your risk across multiple units, reducing the reliance on single tenants. People will always need a place to live, making multifamily properties relatively recession resistant compared to other types of commercial real estate. Even during economic downturns, occupancy rates tend to hold steady as lower rents per unit compared to single family homes can make them more attractive for tenants. I did a presentation about 6 weeks ago, and we talked about the delta between mortgage and rent. And that delta has never been greater. The cost of buying a home has increased in the last 3 years about 38% when you look at it on a monthly bill basis. So when you're going into a multifamily apartment, you may be paying $1,500 rent or whatever it is. If you were to live in a comparable type accommodation on a home, it would be significantly more, and more of Americans with the interest rates being high, the real estate being going up considerably. And I know it's cooled down quite a bit, so things have cooled down a lot, but still, if you look at the past 3 years, the housing prices have gone through the roof and in many markets, making people stay full-time renters. So again, managing single multifamily property more efficient. We've already talked about that. Economies of scales. We also use professional property management companies, and they handle the tenant relations, maintenance, allowing for more passive income for stream for investors. So again, when you look at one of our properties, I'm just going to use our 200 unit in San Antonio because I'm the most familiar with that. So we've hired a third party professional management company. This is what they do. This is what they specialize in. So they have all of the systems, all of the procedures, everything in place for them to be able to manage multiple apartment complexes. So they really know what they're doing. This particular property management company would normally have a regional manager that's over several apartment complexes in the same region. So they see what's happening in the marketplace. Then they're going to have a property manager. That person is going to be very knowledgeable about that specific property. They may have 1 to 2 leasing agents within the office because again, it's going to take 200 unit apartment. The manager's not always the one doing the leases or dealing with the tenants. And so you want to be able to be open 6 days a week normally. And then we'll have maintenance staff. So we'll have a lead maintenance staff, and our lead maintenance staff will have lots of certificates that will save us having to bring in professional third-party services. So for example, they'll have all.
And now, here's someone you want to hear from, our sponsor.
For over 15 years, Skyline Title has been a trusted name in Texas real estate. From first-time homebuyers to seasoned investors, our team ensures a smooth, reliable closing experience every time. Backed by a decade of partnerships and proven success, we take pride in protecting your biggest investment, your home. Visit SkylineHTX.com to learn more.
All of the certificates to be able to take care of the pool. They will have an HVAC certificate so they can take care of most of the air conditioning and heating units. They may have electrical license. They may have several licenses, and they're going to have a lot of skills. So when we're going in, we went in, and remember, we bought 100 apartments. We have 10 empty apartments. Our local team is normally able to take care of everything to make the units ready. Now, we may use third party for other purposes. For example, sometimes painting companies are just more efficient than your own staff because this is what they do for a living. They can paint super quick. Sometimes you are going to have to hire third party people. You're obviously going to need to buy your appliances or your fixtures or your other things. But for the most part, we can usually turn a unit depending on how bad it is, anywhere from 1 to 3 weeks, and be able to get that unit back up and be ready to be rented. Sometimes if you're doing significant upgrades on a value add, it may take a little bit longer. But again, you're using economies of scale, right? We're not buying one fridge. We may be buying 8 fridges, 8 stoves, different things. When we're buying light fixtures and we're making the place just look a little bit nicer, we're buying 200 light fixtures. So there's a ton of economies of scale. Now, if you have ever wanted to learn more about multifamily and you are in the Houston area, we are doing an educational property tour. I will stick this in the chat as well. This coming Thursday. So it's in Pasadena, which is east of Houston. And this is a value add multifamily. This is one we've owned for about 3 years, and we've completely renovated it. It has all new roofs, all new fresh paint jobs. You can see the landscaping's been taken care of. Also on this tour, you're going to get to see a little bit more than you might not. We had 14 units damaged by fire. Took us about a year. It was quite a while by the time they did the fire inspections. We got our permits, but we have brand new ready units that we're going to start leasing. So we're going to give you a tour of everything. So you're going to see an apartment that somebody had just moved out of. You're going to see an apartment that is in the process of being renovated. You'll also see just one of our standard units that have been renovated, but you'll see one of our more upgraded units from the fire damage. So again, if you can come this Thursday from 2 to 3:30, we normally do a tour every month, and we do it in different geographic areas. Sorry for those of you that aren't in the Texas market. They're normally in the Houston area, Dallas area, Austin, San Antonio area, because that's where we're located. Once we start buying assets in other markets, we definitely may do tours there. But this is a really good way for you to learn, to actually be able to walk a property, ask some questions. We will have our property management company there. Jasmine's going to be joining me on this tour, so it'd be a really good way to learn. So one of the other asset classes that we are very bullish on is retail. So for those of you who've been hanging around for a while, you know we've been building this particular unit here in Austin. Now, they all of a sudden decided that we needed to do a retention wall in the back. So it delayed us a little bit. The retention wall is just about finished. We should be able to be fully up and get our certificate of occupancy. And this one will hold anywhere from 5 to 7 tenants based on the tenants. So again, a lot of people say, oh, retail's dead. Well, some parts of retail are dead, right? I get an Amazon box every other day. I've kept Amazon really busy. I've made Jeff Bezos a billionaire. Probably not just me alone, but that feels like it's sometimes all the things. But we find that these new build retails and community centers are actually really busy because people with COVID, they started wanting to stay more in their neighborhood. So it's become very important for you to have some sort of services for them to have within their neighborhood. I missed the one here, sorry. I'm out of order on my thing. I was gonna show you, I didn't put it in here. We also have our development, sorry about that, in Richmond, Texas. We closed on raising the capital. It's called Candela. It's a 62,000 square feet. So this one is a 16,800 square feet. It's a 62,000 square feet, and it's a very interesting business model. So we followed a home developer that bought 450 acres. They're building 1,600 homes in the area. There's also a 300 unit A-class apartment going right behind us. And we managed to buy 8 acres, which gives us 1,000 feet of frontage coming into this community. And this is a very affluent community. The median income in the area is over $170,000. And so on this particular retail that we're going to do, it's going to be what I refer to as high level luxury lifestyle. So we will have dentists, we will have doctors, we will have chiropractors, massage studios, nail salons, sushi restaurants. Again, people in the neighborhood as they're coming home stop, get some food to go, stop and see, make an appointment. Kids in the apartment complex right behind looking for a place, they'll be coming to the sorry, I'm losing my brain here. They'll be coming to the place for ice cream and different things. So it's definitely a lot of things happening that are going on to be able to do it. So and then another one that we're very interested in is industrial. So this was a tour I did on July the 16th. This particular one we did not syndicate. It was a joint venture deal. And it's an industrial development. This is phase one of three. We're building about just over 100,000 square feet of retail. Here's the folks that came on my property tour. And all of these units, we have two different business models on the same property. So we've actually segmented it out into a condo regime because this building here, somebody wanted to purchase the whole building because it was much more tax efficient for them than to be a tenant. Then you can see the way the buildings are. So each building has a garage door at the front, garage door at the back, has a window here. And so this one would hold about 4 tenants and it would give them, there's plumbing in the middle for them to have a restroom in their office. And again, there's a door in the front, a door in the back. The buildings are also high enough that they can float in a mezzanine section. So if they need additional space and they want to create more retail, we can add that to them. So again, this is something that's super, super, it's just a market that's really growing quickly. And this one is in New Braunfels, which is on the way to San Antonio from Austin. Um, this is an interesting one too. So this one is concept for our Berry Creek. So this is actually a particular building that we have in the Houston market area here. And you can see this one's a little more high end on the buildings that are here where you have it. But this gives you an idea of the types of way that it could look if you were going to go the next level up. This is a project that we're working on in Georgetown. So this is the main road access here. So these particular buildings would be more high-end retail shops. And the same with these ones along here. And then these ones are going to be a more industrial base that you're looking at. So we're going to build it's about 106,000 square feet. We're right now, actually tonight at City Council, we're trying to take this piece of property out of the ETJ and be able to do it because we were originally going to do townhomes here, but we just could not get it permitted. One of the other investments I talked about a little bit before was RV parks. This particular opportunity is already closed, which is why you want to get on my list. RV parks is a very interesting model. So this particular RV park is where people would stay anywhere from 3 months to a year. They don't normally have leases less than 3 months. And basically, you just rent a pad on this particular one. And most of the people are coming with an RV that is pulled by a vehicle. They're leaving their RV, and it's temporary nurses, traveling nurses, temporary workers, people doing different things. or people that are just looking for a nomad lifestyle and want to live in different locations. So this is an asset class that we're really starting to get much more serious about. And again, this particular one, we filled this offering in 2 weeks. This is a huge asset class for us. Our cottage, so this is with some partners of ours up in the Dallas market. This is assisted living. And so what they are doing is they are buying homes. So these are regular homes. They are renovating the home. So there's quite a bit of work that needs to go into renovating the homes. You need to put in a full sprinkler system. You need to make sure that the doors are all alarmed so that folks can't escape. And they normally hold anywhere from 8 to 16 people assisted living. So again, the types of folks that would stay there are folks recovering from surgery. If the family's going on a vacation and they need it, sometimes people would just stay for a short period of time. Or this is for the latter years of your life where you require too much care to be staying in your own home, but you don't want to go to a government operated facility. So these folks will have 7 now in the Dallas market, but we just purchased a 5 pack. And this one, they provide everything, right? So the 3 meals a day, bathing, laundry, care. They take care of everything for these folks that live in the home. I managed to go to one of our grand openings. Keep an eye on my social media and different things. When we have another one, we will share it. But for those of you that aren't aware, we're in the senior tsunami. There are more people that are becoming at that age where they're unable to be taken care of by their regular family and they can stay at home alone. Now, these ones have a unique feature. This was one thing that took me a little while to get my head around it. These do not take any government funding. So these are not nursing homes that are Medicare and other places paid. These are private facilities. You can get anywhere from $4,000 to $8,000 a month per bed, which is pretty staggering. And again, these aren't where people are living for 5, 10 years. These are people that are, 3 years. Again, I don't know, I don't want to say how long, but it's for people near the end stage of their life. But the family can't take care of them, but they want them to be living nearby and they want them to be living in a community. So again, this is really interesting that they live together. They take care of everything. This one here has memory care all the way up to hospice. So there's 3 different types, but this one is one that will do that. And again, 8 to 16 people living in a home, normally 38,000 to 6,800 square foot single story home. It's an amazing asset class, and you're going to see more information on this. And I'm going to have Yulia, who runs this, come and do one of our presentations for us. So again, I hope you enjoyed that. Next week, Jasmine will be doing the Lady She. So if you have not joined our ladies group, you've got to make sure that you do. Jasmine's going to be running that one next Tuesday. And so really want to make sure that you check out and join that one there. Now, again, we always say, okay, you're a passive investor, but you're really actively passive means that you have to learn how to become a passive investor. You need to be educated. If you are interested in becoming a deal sponsor, so again, remember I said I started as a passive investor and I switched over to be an active sponsor. Book a call with me. We have a program. There's several folks that are on our program on this call here where we help you to be able to get to the next level to sponsor your deal. So if you remember up here, we had, I went fast, this deal here, Martin and his wife, they're part of our mastermind mentorship program. So we help them to be able to go ahead and be able to syndicate this. Again, I helped raise some capital. They did it through our system. But if you're interested, and also if you're interested in learning a little bit more, Phil does these presentations. There is going to be one tonight at 7:15, so shortly after I finish, and he's going to talk about this concept of becoming an active sponsor. So again, massive dreams need massive action. You're going to have to do things. If you're one decision away from massive action, and again, I really want to make sure that I'm open to you, available. I'm going to put my book of calls link in the chat. Well, I talked fast tonight. We're done early. Let me do that and then let me stop sharing and see if we have any questions. I don't see any in the chat. I can't see you guys when I'm presenting. It's nice to see a few of you. Oh, Tanya, thank you for joining. And Natasha comes every week. If there were gold stars handed out by me, Natasha would have a whole jacket of gold stars. Thank you. Uh, and good to see Audrey and John, another one of my fans. Awesome. Any questions? I know I went a little quick tonight. I talked too fast. I think I got excited. No, thank you, Tanya. Awesome. Well, again, I love connecting with everybody.
Trevor?
Yes, hey there.
Okay, sorry. I didn't know if we were supposed to come off of mute or
You can
type
do
it
anything
in.
you want. Yes.
Oh, okay. So my question is the list of deals that you just went through,
Yes.
the majority of those are still open. Is that
No,
correct?
I have nothing open right now.
Oh, okay.
I have
Okay.
nothing new to invest in right now.
All right.
Yeah.
Thank you.
Yeah. No, so I hope to have some soon. Okay, and there was a question about gaining experience. So gaining experience, I'm not sure if you mean experience to become an active sponsor or experience to be a passive investor. I don't know. You can feel free to come off mute or ask that question. I can answer both ways. So obviously, oh, what should be? So gaining experience, the most important way to gain experience, right, is so if you want to learn about multifamily and you're in the Houston area, obviously you want to come to my property tour, or if you're in any of the areas where we're doing tours, you want to keep coming to these webinars. Feel free to book a call with me. I'm happy to help walk you through. Now, if you want to gain the experience to be a active sponsor, we do have Massive Masters, which is a mastermind. I'm part of Massive Masters, and 11 of my 14 deals that I'm a sponsor on are with Massive Capital, which is the feature of Massive Capital. Yes, so as a GP, so if you can join that call later tonight with Phil, and we do have 3-day events. I'm not sure where you're located, but we have them. Again, we're very Texas centric, so so Denver. Yeah, unfortunately you'd have to fly to Texas, but it's nice here in the summer. It's only 106 degrees today. And we actually have one of our small properties are in Denver. We haven't done a meetup there forever, so I'll find out. But Coffee, just if you can book a call with me, I'll get you lots of information and get you on your way. Thank you very much. Thanks for joining. Denver's a beautiful city. I love Denver. So I went there several times. In my previous life, I worked for iFly Indoor Skydiving, and we had a location up there. It was actually a franchise location, and corporate bought it back out. And I went up, and basically very similar to what we do on value add with multifamily. I went in there, increased the operating value of the company. It was a great experience. Awesome. Any other questions? All right. Well, very good. I really appreciate everybody showing up, and I will see you in 2 weeks. Thank you.
Thank you.